Entrepreneurs oftentimes think that they have the insurance game figured out. We're here today to decide if that is the case. Welcome back to Legacy Builder Podcast. I'm your host, Jared Holt, and Legacy Builder Podcast has been developed to focus on business transition planning, all things wealth management, insurance planning, and even if you're not a business owner, there are things that you can still take away from this podcast here today.
Absolutely.
So today we're going to be talking about insurance planning for business owners, and we're going to be talking about some of the myths surrounding insurance planning. We have Ben Bernard here with us today, who's a managing insurance director of Ascent Financial.
Hey, Jared. Thanks for having me. Looking forward to this.
Absolutely. So Ben, insurance planning is something that, as a business owner, sometimes it gets pushed to the back of the stack to think about, to address.
Too busy to look into it, just don't have time.
We're never going to die. We're never going to become disabled.
Invincible. Sure,
Yeah.
all those things, right?
And you've and your team have worked with thousands of clients now over the last 10 years across the Midwest, and you've figured out kind of what clients might already have for preconceived notions in their mind. And so today we're gonna cover what some of those myths are, and we want to just help set the record straight on some things so that people have a better understanding of what really goes into insurance planning.
Absolutely.
For business owners.
After doing this for over 10 years and growing a team throughout the upper Midwest, we've kind of heard it all, right? There's a lot of myths, a lot of misconceptions out there, and that's what we spend a lot of time doing. I mean, we look into a client's needs, of course, and what that business might need if they had an untimely death, or what that family might need. But a lot of times we are just helping them, kind of debunk some of the myths that are out there that really prevent clients from doing that proper planning. That if they have to file that untimely death claim, they definitely want to make sure that they address these needs, and we really help debunk a lot of the myths that go along through that.
So you were kind of sharing some of those myths here before we started recording. Just start with one of the biggest ones that you can think of that you hear oftentimes.
No, yeah, great question. So the biggest myth that I typically come across is the pure cost. A lot of times clients will think, hey, I can't afford it. It's unaffordable. I need maybe the amount of coverage that I need is it's unaffordable. So that's one of the biggest misconceptions out there. I mean, I think the statistics show that 80% of clients overestimate the cost of coverage. So working with us here at Ascent, we go through a process to learn, what's important to them, what would they need if they had an untimely death, and then we can go out and look at what options are available. And depending on the type of policy that they look into, really determines the cost of the policy. And again, getting back to addressing the myth of it being too expensive, a term insurance policy can really be a very affordable addition to their risk management strategy.
Oftentimes it seems like people will think that insurance is expensive because they only worked with one person. Sometimes that person only represents one company.
Sure.
And I've seen you before work with individuals and help save them 50, 60, 70% on their costs at times simply by shopping the market.
Absolutely. And as obviously, as you know, and our listeners will learn that we're a fully independent office. We don't sell our own products per se. We work with many of the top insurance companies in the marketplace. So, we do customize each plan for each individual client's needs. And again, part of that customization is really does deliver a cost savings. So we're really able to minimize the cost of a policy compared to working with an insurance company that only sells their product, and that's all that they have.
And how often have you seen where clients have the wrong product for their situation, where they're overspending or?
Sure. I mean, times change, right? Situations change. Maybe the plan that was put in place 3, 5, 10 years ago made sense back then, but if things have changed, reviewing your insurance planning, needs to be updated and reviewed as well too. So again, purchasing a policy as when you're younger is obviously going to be the cheaper way to go. But if they have a plan in place that doesn't, meet their needs for today, the planning that they maybe did, 10 years ago is going to leave some holes in their protection that they need.
Yeah. I just heard a story of one of our clients that you guys were working with. That they're spending over $40,000 a year on life insurance for their business, and they were completely sold the wrong product. And you guys are coming in there now and helping them cut costs while still having a first class plan.
Yeah, you bet. I mean, in a situation like that, I mean, we're able to, save on the overall cost of the strategy for that family and free up cash flow for them to, reallocate those dollars towards, building equity, paying down debt in their operation, but still delivering the amount of coverage that they need and want.
So what's another myth here that you've come across?
A lot of times, clients will say, "Hey, I'm super healthy. I'm young. I really don't need coverage. I'm never going to die." Being indestructible, kind of mentality.
So what do they think? They can buy their way to the hospital?
I know, right? By the way, out of the grave, maybe, right? But no, a lot of times when you are young and healthy, that's really that's the best time to purchase coverage, and you're never gonna. If you are able to lock in coverage when you're young and healthy, those are most likely going to be the cheapest rates that you ever, see, going forward, because one of the key contributors to cost is how old you are. So if you are able to be a little forward looking and maybe, get a plan in place that covers your needs for today, but you can lock in some additional coverage in the future, that's really proven to be some sound planning for clients.
So if I'm in my 20s, Ben, I'm starting out in business, I'm growing into an operation. If I'm an owner, what are some of the things I should be thinking about here?
Yeah, with respect to life insurance, young beginning farmers typically, are stepping into an operation or purchasing land for their first time, or putting up a new facility or a new barn, or buying that first piece of machinery, and having a life insurance plan in place. Maybe they've got a young family at home. Really helps allow that client to keep take care of their survivors if something were to happen to them. So,
and I know another myth here that you've said is that people have said oftentimes that, by the time I'm in my 50s or 60s, I won't need life insurance, or I won't need any insurance in place because I'll be set.
True. No, with all the farmers, with all the clients that we've worked with over the years, we do have a lot of clients that have purchased a plan back in their 20s and 30s, and then they're back again in their 50s. So whether that previous plan has run its course and expired, or the idea of getting out of debt completely, it sounds great, in a financial plan, but typically, clients are, anytime that next opportunity or expansion arises, they're looking for additional coverage and whatnot. So doing some pre-planning years ago, for the long run, really helps, save premium dollars in the long run.
So one of the myths being that a young person thinks that they don't need life insurance later in their career. We've seen the stats, Ben. Almost half the clients that apply for insurance with us, how old are they?
Typically, yeah. I was just saying, most of our clients that we see are in their later 50s.
Right.
So again, had they locked in a longer term plan, or maybe looked at a permanent option, again, you got to purchase a plan that's most affordable. But clients that lock in good rates at a young age for the long run, typically are able to address those needs and not have to come back and visit with us again in the future, and because they've already have everything taken care of.
So another myth that I know that's out there that you mentioned before is that people oftentimes think if they have a heart condition, or if they've had some cancer in their history, any health concern, that they can't get insurance, or the cost is going to be too hellacious.
Absolutely. Yeah. That's, in that situation, being an independent firm really allows us to really go to bat for that client and find them the best plan. Maybe years ago, having one of those conditions, cancer, heart attack, sleep apnea, those types of things used to be a knockout question. Mm-hmm. If you had any of those situations, you're not going to have any options. You're going to be declined by every company out there. Nowadays, and again, being independent, every insurance company does underwrite a little bit differently. So in a situation, whether it's, again, cancer history or nicotine use or things of that nature, we can go to a company that kind of specializes and maybe done a little bit more research in that area so that they're able to still give you a good health rating, even though you've had this health history. So, typically if you're currently battling, cancer or just had a heart attack, that's, the options are going to be limited. But, if you've got sound follow-up and you've made a recovery, options are definitely still available for many clients in those situations.
Absolutely. Absolutely. Brian, what are some other myths that you've been hearing?
A lot of the other big myth is that, I've got a policy through work, and that's enough to cover me. And typically, that's a good place to start. If a client has a very cost-effective group plan at their employer, definitely want to have those types of coverages in place. But typically, they max out over at a certain 50 or 100,000 of coverage, and typically that's not enough, for especially with a lot of clients that we work with maybe larger debt loads. They've got, kids at home that they need to replace that income if something were to happen to them. Adding an additional policy in addition to that employer plan does make a lot of sense. So having an employer plan, typically typically that's not going to be, the myth is, hey, I've got one at work that I don't need anything else. But typically those plans, the coverage level isn't really sufficient to take care of the needs of the clients that we deal with. And the other thing too is that if they ever change jobs, we're in a situation nowadays where people don't go work at a company for 30, 40 years and then retire and they've been there the entire. There's a lot of clients that we work with that have changed jobs many times already in their 20s and 30s and whatnot. So, if you do change jobs, that employer plan changes. If you're not working there anymore, that group rate that you were taking advantage of previously goes up if you're even allowed to take that policy with you. So, you're kind of having a private plan or an individual plan, is definitely makes some sense to have that as part of your overall insurance planning.
Absolutely. Yeah, I know my wife is a nurse, and when she's switched healthcare facilities here the last year or so, the offerings were different from one employer to the next. And her previous employer offered 2 times salary, and her new one didn't.
Sure.
And if you were just relying on that, that makes a big difference.
You bet. And I agree with you 100%. I've had, life insurance policies through employers that I've had, and man, when you decide to leave and move on, when you take a look at what that costs to take it with you, there's a little bit of a sticker shock there. So
yeah, absolutely. What are some other myths that you've come across in the past?
We've covered a lot, but I think the other big thing is, a lot of clients are kind of in the mindset of, I'll just save, instead of purchasing this life insurance policy, I'm going to take that money that I would, be spending on a life insurance premium, and I'm just going to invest it, or I'm going to save my money. And I think that, maybe it's not quite a myth, but it's not maybe the best strategy, for example. So I think you
gotta wait about 20 years to die before that probably works.
Well, yeah, you have to stay committed to that savings plan, right? You got to fund it every year and
stay committed to not dying.
Exactly. That's very, very, it's the key component, right? Jared, my job would be a lot easier if I knew the day that the client was going to die. I would know exactly which policy that I should recommend or suggest to that client. But no. So definitely saving for your retirement does make a lot of sense. But having a low cost term insurance policy for the short term does make a lot of sense. You can typically purchase a policy like that, for less than a tank of gas a month per se. And now, and if in life happens, if you pass away in your 20s, 30s, 40s, you've got that term insurance policy there that's going to protect your family, cover some debts, things of that nature. And if you, it's the old strategy of buying term and investing the rest. So instead of putting, I'm a firm believer in putting all your money into a life insurance plan isn't the best strategy, and putting all of your money into just your investments isn't the best strategy. I think there's definitely some advantages to doing both. So and if you can qualify for a low cost policy, and the other big thing these days is that a lot of the policies that we recommend to clients come with living benefits. Now, living benefit is kind of a newer term. It's been around a while, but we do have some term insurance companies that offer living benefits. And again, a living benefit is a rider that comes along with the policy. So, Jared, just a quick question for you: what do you have to do to collect on your death benefit from your life insurance policy?
Oh, I usually got to be under the ground.
You got to die, exactly right. So a living benefit is a rider that allows you to use your life insurance policy while you're still living. So if you have one of these situations where you've had a heart attack or a stroke or a critical illness, you can actually tap into that life insurance policy to replace income or to pay medical bills. You're typically, if you've had one of those health issues, you're dealing with quite a bit of stress, and a lot of it's due to your health, of course, but also financial stress. So it really allows clients another way to access that death benefit through a living benefit rider. So again, investing is great. Buying life insurance makes a lot of sense as well too. It's just we really like to spend the time with clients to kind of learn more about them, what their needs are, and customize what's the right balance for the client.
So I have a myth for you to throw out. If you watch TV, if you read certain financial self-help books, you'll hear experts say that only term insurance is the right fit. If you listen to other insurance people out there, they might say that anything but whole life insurance is the best fit. Ben, if you're a business owner, if you're a family, what do you listen to and where do you start?
No, that's great. I mean, there's a lot of opinions out there. That's for sure. There's a lot of noise out there as well. Around the insurance, debate on
a lot of experts.
Yeah, a lot of experts. So typically, what I look into with those situations is, trying to maximize the benefits of each type of policy. If the client has a need that's got a timeline on it, term insurance makes a lot of sense. It's a low cost policy that gives you maximum death benefit per se. But if you have a need like a buy-sell agreement where you've got a multi-generational business that that need for that policy is not going away. It's not going to go away in 10, 20, 30 years. It's going to be there for the long run. Or it's an estate tax issue. That estate tax issue might not it doesn't have a term on it. It's going to be there for when you die, not if you die. So that's a good situation where we need to look into maybe a permanent policy. And there's a lot of different, traditionally those are called whole life policies, right? A lot of our listeners have had had family members that have had whole life policies. Permanent coverage is a little bit different these days. There's several different types, which I won't get into today. Maybe that's a future podcast, but, we're able to, again, find out what's most important to each client and, or that business and match them up with the right policy that fits their needs.
Yeah. Absolutely. And if a client has a permanent policy in place, how often should they be reviewing that? I mean, is it really true that every permanent policy will be there forever?
There are, typically, at Ascent, we try to review permanent policies every couple of years. You don't have to probably review it every year, but it is prudent to watch and see how that policy is performing. I can't tell you how many times I've met with clients who have a policy that they thought was for life, was forever. Lo and behold, to find out that that policy is expiring, in their 80s or late 70s when they really need it. Typically what's triggered that or what's caused that is, the policy was set up and it was supposed to perform based on, interest rates that were, in double digit interest rates. For example, back in the 80s, right, you could go out to any bank in your on Main Street and buy a CD that paid 10-12%. Well, the insurance products kind of mimicked that, and obviously that hasn't been the case right now. Interest rates have really been, it's been a challenging environment. So that lack of performance on those policies has really shortened that guarantee. So they may have thought they bought that policy out to age 100, but based on the performance, it's because the cash value hasn't performed. It's really shortened the life of that policy. And if they don't review that every couple of years, or at least every 3 to 5 years, that's a long enough window where, if you don't look at that thing for 10, 15 years, and all of a sudden now you're 60 something and you got a policy that you thought was going forever, but now it's expiring, on your 74th birthday, just to throw a number out there, and you've had some health issues and you can't qualify for a new policy. You've funded that policy for many, many years, and it might not be there for you when you need it most.
So a rule of thumb is, if you have a permanent life insurance policy in place, don't just assume it's going to be there forever. Check it out, review it, talk to your advisor, talk to your agent.
Absolutely.
If they're not available and you want to work with somebody else, they can call you and your team and get a free second opinion to make sure that that's the right policy for the long term.
Absolutely. There's, we're always willing to be that quality second opinion for any client that's out there. Again, a lot of times the person that sold you that life insurance policy might not be the one that's there for you, at the end when that policy, when you go to file that claim and whatnot. So, more than happy to review those policies, see how sound that guarantee is. And, we do have products that come with a fully guarantee option, so you don't have to rely on the performance of of the cash value or the interest rates that it's accruing at. So,
well, Ben, thanks so much for taking some time here to talk through some of the myths around insurance planning for business owners and families. From what I've gathered here, some of the takeaways are that insurance doesn't always have to be expensive, that having coverage through your employer isn't always the optimal fit. Sometimes you might need some more.
Sure.
Just if you have a health condition or two, don't think that it automatically rules you out from getting life insurance in place.
Right.
And make sure that you can work with somebody here that can offer a wide variety of solutions. That really wasn't one of the myths, but it kind of was a solution to some of the myths that you listed.
Just because one company says no doesn't mean that they all will. So it's definitely worth clients' time to work with an independent agent. Go out into the open market, see what's out there, and typically we can find an option.
And buying term and investing the difference, or not buying any life insurance right now and just putting money into investments might not be a completely fulfilling strategy either. It might leave some room on the table. So
absolutely.
Yeah. Well, hey, thanks so much, Ben. Appreciate you taking some time here today. And until next time, we'll talk to you then.
Absolutely.